the short-term outlook for gold and silver is a hell of a lot better than it was even just a few months ago.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics as we continue our coverage into the world of silver and gold with some wild times out there. Gold over $2,000 an ounce. Silver has been rallying over the past couple of months, and today we're going to be touching on that, some of the dynamics going on there, and also some of the things happening with the silver mining sector. And fortunate to be joined by Andrew Pollard of Blackrock Silver, who has been doing a good job of moving his projects forward. Also had some news out today, which we will touch on in a little bit. Although, Andrew, it's great to have you on in here and talking some silver today. Nice to have you back on the show. And how are you today, my friend?
Thanks very much. I'm always shocked to be invited back, so it's good to be here.
Oh, come on now. It's always a pleasure to have you here. And we're recording on Tuesday, April 18th. And today we have silver up a bit at 25.30. Quite an interesting past half year we've had where main driver at times seems like it's been the Federal Reserve until banking issues have popped up. But if we go back to September here, where silver was actually dipped below $18, was a grim few days back then. Rallied a bit into this year, then came off in February. Then the banking issues that we saw have driven the price higher again. So I'm curious, just any thoughts that you have on what we've seen over the past couple of months in silver price, and then we can dig in from there.
Well, if you remember where we were at this point last year, this was like right at the front end of what was a catastrophic sell-off, a sell-off in silver that hadn't really been duplicated since the Great Depression. I think it started around early April last year, but silver was trading up at $25, $26 right when Russia invaded Ukraine, and that kicked off. And then between mid-April and June, I mean, look at that. It was down to from 26 all the way down to about 17 within the span of just a few months. I think in April alone, it went down 17 out of 19 days. It had never done that since like 1920s. So we've seen everything this year. Now silver's right back up, same point it was this time last year. Retail's been chased out of the industry. It's always been one step forward, three steps back. It feels like this year, just because it's been the most aggressive Fed policy in 40 years. That the Fed, anytime things start to run, they've really tamped things back down. But now silver's right back to that same level it was this point last year. The difference being that this time last year, ounces in the ground were trading for about 2 to 2.5 times what those same ounces are trading right now at the same levels. That just shows you the potential. If this rally stays sustained, I'm saying if it stays around $25 and people start dipping their toe back into their investments in the sector, just as they were this time last year, you'll see like the mining stocks like mine, which actually have ounces in the ground, will become like leveraged call options just to get back to the ounce in the ground valuations. It's like 2.5x return, all other things being equal. So that's the rising tide that's going to lift all the boats. We've seen the valuation start to grind a little up in the last month, but they're still way, way, way off what they were. So that's how you know that there's still a lot more room to run. If silver goes beyond 25, 26, my goodness, all bets are off. But the short-term outlook for gold and silver is a hell of a lot better than it was even just a few months ago. You've got the Fed indicating, well, they're now boxed out. I mean, they just can't do much more. So they're going to start weighing off the gas pedal on their policies. You've got banking crisis, which is just emerging, probably a commercial real estate crisis that's just emerging. You've got central banks buying gold in record amounts. At the same time, those same countries are dropping the US dollar. My goodness, we're in the middle of a hurricane right now, and it seems calm out there. But, if things just keep on this track, I think investors, especially investors on the leveraged stocks like ours, will stand to make a serious, have some serious promise in the not too distant future.
Yeah, certainly well said. You mentioned a couple of interesting points, and one of which we'll get to in a second with how the environment for the silver stocks and money coming into the sector looks. Although, just to finish up what we were saying on the Fed, here is the Fed pricing in the futures markets as of today. It has us going another quarter point hike at the next meeting, staying there. Cuts have been pushed out a little bit farther than they had been about a week or so ago, I guess. You don't have a banking crisis every day, then it seems like people forget about these things quickly. Although you mentioned something else that is becoming more and more in the news, which is the commercial real estate sector, obviously going to be impacted by the rates. Here, fund managers see commercial real estate as the most likely source for systemic credit event, and we did have a default today. So kind of a tough position because if the Fed does continue hiking, you have more pressure on things like this. Again, we've heard how there's generally a lag in the impact of the Fed hikes. So, I mean, we've already had banking issues and a lot to suggest that things, even without further hikes, that there's a lot to be at least have your eyes open to. And again, if they cut rates, then we know where that leads us. So kind of an ideal environment, maybe not an ideal environment for people just living, trying to do their thing in the world, but these from the perspective of gold and silver sets up a pretty good platform going forward when you talk about whether prices stay at $25 or go higher or lower. Seems like we're in a bit of a sweet spot, at least from that perspective.
Well, certainly. I mean, listen, at $20 or $21, none of the silver producers were making any money. I mean, a couple were, but most are just treading water or focused, just what was right in front of them. They weren't really looking external in the industry. So you haven't really seen M&A start to pick up in a way that I think it will, because at $25, these companies aren't just treading water. They're making money hand over fist now. That's a huge, huge bump in their margins. And they'll start looking, from getting their own house in order to start looking to be opportunistic and adding reserves. So I think we're not, we're at the point now where if things just stay this way, the majors and the mid tiers, those should start running. That will start trickling down into the developers and the advanced resource projects like us, which are highly levered to the price. And once you start to see M&A kick off, then you'll start to have other people jumping in from the sidelines, and it's the momentum just starts to snowball, and I think we're right at that point now. So this is what we've all been waiting for a long time. Silver's been all over the place, but I think we're at the point now where investors' patience will should start to get rewarded. I think this is the best outlook we've had in a long time. Luckily, we're also Blackrock. We're financed now. We've got three different projects tied to three different commodities. There's three different ways to win here, and we're sitting back, and I think this is, yeah, it's gonna go from what's felt like a slog to something where it's gonna be fun. So yeah, come along for the ride, if you will.
Yeah, sure is quite a change in the environment in just about a half a year. Although a lot of people I talk to, I think some of the hesitancy, and you touched on this a little bit, is that silver is now up at $25, although we've seen that volatility. And it feels as if people are waiting on the sidelines, whether you have more mainstream generalist money come in. That is it a matter of silver just staying at this level for a certain amount of time, whether that's a couple of months, half a year, that you think brings people back in, or
Well, I don't think it's at these levels. The producers should be cash cows. The generalist money will start to come in once that's reflected on their balance sheets, and that's quarter over quarter sort of thing. Beyond that, you know, when silver goes, it goes. That's the best thing about it. That's the worst thing about it. The market's always future facing. It's always pricing in what's going to happen, not tomorrow, but 6 months from now. As soon as it's clear that the Fed is truly boxed out, that they truly are going to start leaning off the interest hikes and focusing on other matters, and I think that's the biggest thing, because the Fed's been dictating the market for the last year entirely. And when silver goes, it goes. I mean, in this setup feels very similar to March and April of 2020. Um, Silver got sold from $20 down to $12 during the COVID crisis. But then as the world started opening back up, it went from $20 to $30 in 3 months. We went from 7 cents to $1.60. Now, naturally, a lot of that was on our discovery, but even pre-discovery, we went from 7 cents in March to about 45 cents in early July, and that was just market the tide raising all boats. I think the tide's coming in. So this is where you want to be, and this is where you want to start laying down some positions sector wide.
Yeah, that makes a lot of sense. And it's interesting as taking a look at the 2 year chart, we see just about a year ago, we were at that right around that $26 level. Just about 2 years ago, also at that $26 level. And if we take just a rough look at the SIL Silver Index, Silver Miners Index, and the SILJ, you can see obviously there were a lot of changes in some of the conditions. I mean, we do have higher interest rate that affects the mining equities, also higher production costs due to the inflation that we've seen. Yet here we see 31.48 level on Tuesday, up at 39 about a year ago, was substantially higher 2 years ago. Similar chart in the Junior Miners Index. And any thoughts on that? Again, this is just a rough approximation, but I'm curious how you're seeing just the general levels on these.
Yeah, it shows that silver's got, all other things being equal, if silver explorers, developers, and producers trade like they were when silver was last at 25, 26 for a sustained period, that's a big re-rate you're looking at. So it depends on what your outlook is individually. But I see this as being the perfect storm, between the Fed easing off the hikes, between central banks buying gold and de facto silver at record amounts, or stackers coming in to buy silver in record amounts, the de-dollarization of the US dollar effectively globally. That's another big one. And then you got some bank runs, good old fashioned bank runs. I mean, this is where people will start to look at silver and gold as truly that hedge. The US dollar, should be rolling over if all the central banks that are buying gold in record amounts, those are the same central banks that are dumping treasuries right now and aligning with China and the BRICS. So, it's things seem to be picking up in real time. We're living through the history books. I mean, I'm sure in 30, 40 years, people will be looking at this point as a very key inflection for society. But gold and silver have been around for ages, and I think this is the exact time when you want to own that. And if those are good investments, then the leveraged play on that would be buying the explorers and the developers and the producers, which should start making some real big moves.
Yeah, and well said. You mentioned the dollar index here, which did have quite a rise last year, although has come down almost just as fast. Um, so
Works for me. I raise money in Canadian, and unfortunately for the last year, we spend all our money in American because that's what all our contractors are paid with down in the States. So we were getting a double whammy on the foreign exchange side of things too. So it's from our perspective, we'll be able to make our Canadian dollars last a hell of a lot more, assuming a US dollar comes back down to earth. But ultimately, I mean, gold is already pretty much through its all-time highs in every other currency except the US dollar right now, and it's right at the doorstep there. So it's doing what it's supposed to be doing right now, and I think it's going to be getting its luster back globally from a generalist audience very, very quickly. You're going to start to see these discussions enter more of the mainstream, financial news shows more and more, especially as the major mining companies start to book more profits.
yeah, we're already seeing that to a degree. I mean, not perhaps more on the gold side than the silver side, where I guess you have gold break 2000, and wonder if we'll get a similar effect when. To me, I continue to think it's that $30 level in silver,
Yeah,
which we got a taste of 2 years ago, and was interesting when we had a couple of hours over the $30 price. So, yet interesting that you do see a lot more coverage. Even the banks talking a lot about gold. again, more so gold than silver, but certainly something that should these trends continue, which seems like there is a decently high probability of that happening, that you would expect more of. Last thing on the silver side, wanted to ask you about any thoughts on the numbers showing that we're in a deficit over the past couple of years. Silver Institute, I believe, has their new report coming out. Usually it's in April, so probably in a couple of weeks, but they had that update last year showing a deficit. And just curious, anything you're hearing on that side?
Yeah, well, I mean, they do show a deficit. The only counterpoint I've seen to that is that some critics argue that they don't take into account enough of the recycling market. But effectively, I mean, you've reached we're off a production cliff right now, and demand is only getting bigger. So, I mean, I'd say there's certainly a deficit projected. I think one thing that Silver Institute didn't project is that there's been substantial shocks to the silver supply chain. Peru, there's been blockades at some of the biggest polymetallic mines in the world. And silver, Peru's the third or fourth largest silver producer in the world right now. Mexico's got, its own issues. I think obviously Russia, China, as we might see the world go from a globalist sort of position to become much more segmented. Obviously, Russia's already now excluded. They're a top 10 producer. Having a domestic source of high grade silver and gold like we do in Nevada, I think that's going to put a big target on our back from a takeout potential, simply because, I mean, Mexico's chasing away investment at this point. There's just they pulled the license of a gold company just yesterday called Almaden. You've seen what they're doing with the Fortuna and their San Jose mine, not renewing permits. They're not going to be doing any more open pit mining in Mexico. Mexico's easily the largest silver producer by a country mile, let alone the fact that 40% of the country is now controlled by cartels. I think ounces outside of jurisdiction's going to geopolitical risk is going to come into play very shortly, more so than it has in many decades. And I think domestic sources that are clean and ethical, in the rule of law, where blockades really aren't allowed, that have good social license, those should really be the standouts. And luckily, I think when you exclude all of the other countries, Blackrock's really the prettiest girl in the hot tub of the silver space. So
Yeah, and I think that's certainly worth noting, the jurisdictional risk, especially as Mexico has some proposals that in proposals form now that, if passed, would certainly not make mining there much easier or more attractive, and just something that we will keep an eye on here. But Andrew, before we wrap up, I was hoping you could provide an update on Blackrock and what you guys have been doing there. I know you had some news out this morning with your lithium project that you found, which was a nice addition to the portfolio. So what could you share
yeah,
with us on that one?
yeah. So at Blackrock, we now have silver, gold, and what looks to be a whole heck of a lot of white gold in the form of lithium. So, down in Tonopah, which is this world famous silver system, which we consolidated a few years ago and started drilling, we've established it as being one of the top two highest grade undeveloped large silver assets in the world right now. And it's on private land. And when we consolidated the district, we picked up all land around it that we could get our hands on. And we staked about 20 square kilometers of BLM claims just north of our main silver gold deposits. Now, we went in search of silver and gold up on these new claims last year. We didn't hit any, but every drill hole hits a whole bunch of lithium, which is very interesting because it turns out that in Tonopah, there's a silver district that goes east-west, and then you've got this emerging lithium belt that cuts right across it. And it's an emerging lithium belt in the sense that it's not a brine and it's not a carbonate. It's a lithium claystone deposit, which is a whole new type of deposit, which has really just come into favor in the last decade or so due to big breakthroughs in the extractive technologies, the recovery. So, similar to the Carlin trend up in northern Nevada, what you're finding is you've got like the Tonopah lithium belt, which we're dead smack on, right? Where it intersects our silver district, is emerging as like these big monster deposits, bulk tonnage, surface level deposits. We're right next door to a company called American Lithium down there, who has a $5 billion NPV outlined on their project. They're trading for about $600 or $700 million Canadian right now. That's the largest lithium deposits in all of North America, and we're right next door. Just a kilometer or 2 kilometers away is another deposit which just established itself. It's owned by American Battery Metals. It's established itself as being one of the largest lithium deposits in North America. Also, turns out the Tonopah lithium belt, due to some breakthroughs in technology, is emerging just like the Carlin trend did. These are monster deposits. What we just showed is, as soon as we made our announcement last October that we hit lithium, we partnered up with an actual lithium company because it's very different than gold and silver exploration. And this morning we announced the first drill results from our joint venture with this lithium company. Turns out when they went back to twin our original discovery holes, their twin holes confirmed our original discovery with core, but their grades came back 40 to 85% higher than our original discovery holes, meaning there was an issue at the lab from our initial one. And anytime you go to core or twin holes and establish the deposit and establish the grades are significantly higher, that's a phenomenal problem to have. Not only that, Tierlac, our partner, drilled out an area that's 4 square kilometers. They've established a continuity and the grade profile. These are the highest grade drill results we've seen at the project so far. And it's over a massive area. What you're showing just right now represents like absolutely crazy tonnage potential that we've just established. And there's 6 more drill holes waiting and all pending. And those drill holes are step outs from this. This is going to be a big system that we're establishing, and it's lining up very similar in terms of grade profile to American Lithium's deposit, which is right next door to us. This could be a sleeper. Now, we're not a gold or silver company. Sorry, we're not a lithium company. We're gold and silver. But what this gives us now is ownership in a project effectively for investors. They have a free warrant on the price of lithium and on this deposit on lithium. We don't have to spend a penny. Tierlac is spending millions of dollars to earn in to their interest in the property. We can ride that, and they're going to be putting a resource estimate out on this by the end of the year. So we'll have fundamental value there. It connects with our silver and gold deposit in Tonopah, meaning, we're a standout in the industry right now. We're literally a silver, gold, and lithium mining complex in the heart of Nevada. I think from a green metals company, that should appeal to a lot of companies, not just silver and gold companies now.
Yeah, it certainly is nice that you got that lithium mineralization that you found there, and good to see that the drilling is underway. And again, I'll mention that you have more results coming out in the next couple of weeks for those next 6 drill holes. I'll have the link to this press release in the description field below so people can read through that. And Andrew, before we wrap up here, just wanted to check in. I know you've been getting the permitting in place for Silver Cloud, and you have a drill program that you'd like to get started this year, and perhaps you could just give us an update on that one.
Yeah, no, we're awaiting the final permits from the BLM up there and waiting for the last of the snow to melt up in northern Nevada because it's been a wildly, unseasonably cold winter up there. But things are warming up quickly. It's gone from the low 50s to the mid 70s in just the last week. So we'll have access and we've got drillers lined up to start some point in early May. And what they're going to be doing is following up on our multi-ounce gold discovery that we made and announced back in, I guess, January was the last set of results from Silver Cloud. But I mean, this is the highest grade intercept that we're following up that we have the company, and that says a lot because our Tonopah Silver District is already established as one of the highest grade silver deposits in the world right now, undeveloped silver deposits in the world. So up at Silver Cloud, this is a brand new grassroots discovery. that we're going to be following up on, and really just offsetting that original intercept. So stepping out on either side, putting one foot in front of the other. At these grades, ounces pile up very, very quickly. And we're surrounded by some of the biggest mining companies in the world up there. We've got Nevada Gold Mines Complex immediately south of us, and we're effectively the donut hole of Hecla Mining's claim block up there, because they own the Hollister deposit and Midas deposit, that are effectively circling us. You got First Majestic up there with Jarrett Canyon. Newcrest is up there. There's no small companies doing anything up there. We've got 45 square kilometers in between two of the highest grade gold mines in Nevada. We're showing multi-ounce potential there, and we think this program, if we can just confirm the discovery with a few Pierce points, I think that's going to get the corporates talking very quickly there, because you don't have to build anything. There's mines, there's mills on care and maintenance that are hungry for high grade tons, and we think we got that. So this is going to be a very fun program for us there, and that's going to be starting in the next few weeks.
Well, a lot of progress you guys have made there, Andrew, in just a short period of time, and a lot to look forward to this year. And perhaps in closing, what is the best way if people do have questions, would like to get in contact or find out more? What's the best way to do so?
Yeah, just reach out to me via email at andrew@blackrocksilver.com. And I'm always happy to respond to questions, and always happy to hop on calls too. So, yeah, track down via email though.
Well, Andrew, sure appreciate that. Great to see, as always, get your insight into the silver market. Some interesting times out there, and seems like you're positioned well for what's going on. And thanks for joining me, and we'll look forward to catching up with you again soon.
This is the exciting part right here, I think, for gold and silver investors moving forward. So stay tuned, and yeah, well, it's good. It's going to be a wild ride, but I'm hoping it's going to be a fun one for everyone in the sector.
I think so, and think we're just about there. So it will be fun to see going forward, and we'll look forward to continuing the discussion.
Appreciate it.